From buzzword to backbone, how blockchain is quietly transforming humanitarian aid. For years, blockchain technology has been surrounded by hype, jargon, and skepticism. But as Candace Kelly of the Stellar Development Foundation recently highlighted, behind the headlines and beyond the speculation, blockchain is quietly proving its worth in some of the world's most critical sectors, including humanitarian aid and international development. Moving beyond the hype. One of the most common misconceptions among humanitarian organizations is that adopting blockchain requires a massive, costly overhaul of their systems. According to Kelly, this couldn't be further from the truth. You can start small, she emphasizes. Start with a single use case. That's what UNHCR, Mercy Corps, and others have done. The technology is open source, the barriers to entry are low, and the technical support is often freely available. What's more, blockchain isn't some theoretical future. It's already delivering real-world benefits, making processes faster, cheaper, and more secure. Organizations that delay experimenting with blockchain, Kelly argues, risk falling behind as the sector rapidly evolves. PASH, simplifying complexity for real impact. One of the most powerful insights Kelly shares is that the best blockchain solutions are often invisible to the end user. Recipients of humanitarian aid don't need to know they're interacting with blockchain technology. They simply need systems that are faster, more reliable, and more accessible. Through partnerships with organizations like Mercy Corps, the technology is now being used to automate and improve aid disbursements. For example, programmable payments can be tied to real-world events like rainfall or drought thresholds, releasing funds in anticipation of a crisis rather than in response to one. This marks a fundamental shift towards proactive, rather than reactive, humanitarian action. Unlocking financial inclusion. Beyond aid disbursements, blockchain is also helping to address deeper issues of financial exclusion. Kelly recounts a powerful example from Colombia, where switching from cash to digital payments allowed women in a small village to access the global digital economy for the first time. Suddenly, they could work remotely, earn money online, and reinvest in their families and communities, all without traditional bank accounts. These digital payment rails lay the groundwork for broader financial services like credit and insurance, unconstrained by geography, bias, or outdated infrastructure. Blockchain's transparency and traceability create new pathways for underserved populations to build credit histories and access economic opportunities previously out of reach. Bridging the public-private divide. For partnerships between public sector institutions and technology providers to succeed, Kelly emphasizes the importance of open-mindedness and collaboration. Effective solutions rarely come from a single actor. They require ecosystems of local fintechs, on and off ramps, governments, and technologists working together. And while blockchain may still raise eyebrows in some policy circles, Kelly finds that human stories, not technical jargon, are the most persuasive tool. When stakeholders hear how these technologies are enabling people to get paid faster, rebuild after crises, or keep their children in school, skepticism often gives way to curiosity and support, a future where blockchain fades into the background. Looking ahead, Kelly envisions a future where no one talks about blockchain because it's simply become part of the infrastructure, much like the internet or cloud computing today. The people who benefit from these solutions don't need to know it's blockchain, she says. They just need systems that work. In this vision, blockchain serves not as a headline-grabbing buzzword, but as a quiet, dependable backbone, helping to move aid faster, empower communities, and build financial resilience where it's needed most.